Hey guys, welcome to another BiasLogic live. Let me just cross check everything in terms of the sound and although things are working, just bear with me a moment. Let me just test it if it's working. Perfect. Sounds good. Perfect. Everything is coming. Let me just check. Yep, sounds good. Everything looks fine. Okay. Uh, so far so good. Nobody's here in this live, but that's fine. We'll just do a quick analysis in terms of where the market wants to go next and where our the liquidity is resting. So um, if you're in live, um, just ask any questions. Uh, I'd be happy to help you and answer any questions. And yep, I'll just rearranging some stuff here. Give me a moment. Sounds good. Okay. Okay. So what we normally do is we analyze the the market, mainly the high liquidity crypto coins that we analyze and predict the market, and we do a proper risk management and analyze the psychology behind each and every trade and what is the reason behind each and every trade that we take, and we give a proper explanation in terms of how do we analyze the market and what could be the potential reason why the market wants to go next. This line, something like this, probably something like this. So this is a kind of a prediction here. um, yeah, we'll just quickly analyze the market and see if there is a potential opportunity to um, enter into a trade. I know there are not enough viewers right now here, so that I'm not going to give any sort of um, like a trade setup right now. So it's just the analysis. So once we start getting a lot of users, then we'll bring some valuable trade setups live. Most of the days I come live every day, Monday to Friday, because that's the time where the market is active and liquidity is present in these weekdays. And most of the time, the weekends are not that great in terms of um, the the liquidity. And yeah, we always go for a lower time frame to enter a trade. Then we take trade based on what is what is the reason behind the trade and where the liquidity is resting. And you can consider this live session as a training. So if you really don't want to pay for any sort of a course or something, then you can learn from this um, live. Most of the time, we discuss here the reason behind the liquidity movement and why the market one when we say that the market is trying to move here, then what is the reason behind this move, and all these things that we'll be discussing here every day. Um, yeah, it's a little bit uh, bored here without users. It's a little bit hard for me to give a proper lecture, but whoever watching this video later, then you can um, learn something. So what we're gonna do right now, I'll just yeah, there are a couple of drawings that we did last time. Probably I'll be removing it. I'll just give a quick analysis in terms of what's happening with Bitcoin. So it looks like monthly, it's kind of like a bearish moment here, but based on what I see here, there is a liquidity grab has happened here. So the market wants to go a little bit higher for this month. Um, then we do a weekly analysis in terms of how these things would uh, looks like in terms of the liquidity. And I see the market is trying to go up based on like so overall the market is a downtrend, as I mentioned, from month over month there is a bearish movement is happening, and week wise, of course, this is you can see that a consecutive um bearish candles, that's most probably kind of a Trump effect in the market, and the US dollar is kind of like strengthening. That's one of the reason why the crypto is uh, dropping in terms of the price. But that's again, it's all about market makers who decides where the market wants to go. And what we are gonna do is we just identify where is that most possible entry and exit zones. Then we take a trade based on the right time. And based on what I see here is that for this week, um, it looks like um, a bullish, and there are 5 days left to close this week. For so technically, this particular candle to close, there's a 5 days and 22 hours. So based on what I see here is the market gives a pullback and it respects um, the high time frame liquidity. Um, then it took the high time frame liquidity and it dumped, and this is something very strange when it comes to um, analyzing the crypto. It looks like anything can happen in this market nowadays, so there's nothing that you can predict like this is going to happen, because it's a month of manipulation and it's a week of manipulation, so you can expect a lot of manipulations are going to happen this week. So based on what I see in this week, um, it's probably going to be a bullish, and it's trying to take at least um, this liquidity's price is somehow planning to reach 64,723. That's the target for the next 5 days. So you can expect the market is going up a little bit, but anything can happen in the market, right? So here, as you can see here, it looks like the market gave a pullback to that respective zone which I mentioned. But when you see the last 4 days, so it could have been like a little bit easier for the market to to move um, on Saturday, but of course we don't expect a higher liquidity on Saturdays and Sundays. So you can see here, I expected this market a move a little bit like Sunday, right? So Sunday I expected the market could take this liquidity, from here, like a little bit pull back and then just take this liquidity, then move wherever it wants to go. But you can see what happened on Monday is a kind of liquidity hunt by the big players. So that's where, like, you have to be a little bit cautious in terms of investing money if you're looking for a long term, or if you are a day trader or a swing trader, then that's where you have to be a little bit careful, because based on the prediction, it's supposed to go from here to take this liquidity, which we're resting above, but due to some reason, um, it didn't move. But what happened was it it took multiple liquidities, was resting here on Thursday, on Friday, which is a good thing because we always believe in liquidity to liquidity transition. That's where we make we make money from crypto, right? So based on what I see here is the week should go up till here, but we don't know when. But you can see some nice, interesting moves on tomorrow, day after tomorrow, or maybe in the next 3 to 4 days. Before Friday, I'm expecting the price could get here. So that's the weekly prediction. Um, when it comes to the trading, what we normally do is we look for this particular day, because I do day trading and I find a specific time and the perfect entry to enter into the trade and take that position and get the profit. And if it's a loss, then I'll be getting out of the trade, so that I know my predicted risk and the reward, what I'm planning to get, and how many trades that I planning to take, and everything is pre calculated. And if you are looking for a system that helps you to analyze the market and do a kind of a proper risk management, then you can just try the BiasLogic system. So this is basically, I built a system for the people who had an issue of, or who having like an issue of emotionally they cannot, like, take a trade, or they are just revenge trading, they're over trading, and you need not like a signal group or a system was actually telling you buy now or sell now or take this entry and use this much of quantity and buy it. This is not a kind of a system, but of course it has a feature inside it where it shows you a bias dashboard. But that's more into just to identify where the market wants to go. But most of the thing that we do here is the risk management and the psychology behind the trading. So the system helps you to identify how many quantity you should buy, and whether when you enter a trade, based on entry, target, and stop loss, a system will tell you, is this trade it's worth of taking it or taking the risk. Then, and it would give you an immediate uh, a snapshot of how that outcome is more likely to happen. So if it's like a visible viable trade, then of course you can take it. And that's one of the reason why I built this, because I used to uh, use an Excel sheet before, but I find it like a little bit challenging every time when we do the math and journaling the system, and that's a little bit um, a tricky thing. So that's one of the reason why I I created this website. So for the people who first time visiting live, then you can explore these features here. So it has got the journal, it has got the performance dashboard, and this account that we created exclusively for the live. So whatever the trade that we take for the live, then we'll be doing, and we'll be logging it here using the system. Then you will see the consistency and how we are constantly generating the profit with the proper risk management, and how the system is actually helping us to save from bad trades and avoid the emotions and all those things. So if you really wanted to explore this account, and if you want to just get some in-depth view of the system, I'm giving a free weekly Bias Plus community access. So you can just provide your name and email address, and you will get immediately into the community access where we can discuss, and I post the trades and the reason behind a trade. So because the live is only maybe 1 to 2 hours in a day, but in between, if I take a trades and I record a snapshot and I post it there, and if you have any questions, then we can discuss over that community at the same time. Once you join to this free access, then you will get a lot of tools there, how to improve your trading. Plus, if you want to explore this system, then I've recorded a detailed video about how to use the system. And if you're really interested in exploring it before make a payment, because this is a $19 monthly dashboard access, so you get all these tools what is required for a crypto trading currently in the market. And trust me, this is a really low cost, and I offer you a 7 days money back guarantee if you don't like it by using it in the next 7 days. And if you try it and it's not giving you any value, you can request a refund here. I'd be happy to give you the full refund back. So that's all about the BiasLogic system, and yeah, it has got multiple tools, and it's worth of $19 subscription, where you get a bias dashboard, you get a risk guard system, a position calculator. The main thing is the trade journal, a performance dashboard, and a consistency dashboard. Technically, what do you need in terms of to become like a profitable trader? Then what the really important things to become like a profitable trader, and that's here. So I don't want to get bored by showing every time the features of this Bias Logic dashboard. But whenever we get a trade, then we try to log here. Then we'll see it from there. So yeah, coming back to the the analysis, as I mentioned, based on the day trend, it looks like, yeah, there was continuous bearish movement. Then the price is now trying to do a kind of a, a pullback to the next imbalance. And based on what I see here is, of course, the week is trying to go and take it, but the day doesn't look like it's going to be like an immediate um, a move. Then we, like, do an in-depth analysis in terms of how the 4 hours is doing. So based on what we see here, 4 hours is, it looks like, again, there is a pullback, and it took the liquidity and trying to move. And based on what I see here is, I am expecting the price could at least come here. So I mark it the blue as 4 hours. So I'm expecting the price could at least come here, since it needs a pullback, and reaching here is not that a kind of like an easy way based on what I see the current market movement. Because if the market makers decided that they would like to go and grab that liquidity, they can, right? But it's not that immediate. Like, okay, people who sell from here, then they made the money, then they're just buying from here, then again they're making the money. No, that's not gonna happen. So it takes time. because there is a, as I mentioned, like the day consecutive uh, candles doesn't look nice, and I'm sure that a lot of people, as I mentioned, they tried to make um yeah, as I mentioned, yeah, with the daily time frame. So people expected to take of course it's supposed to go up based on my analysis. Like you see the people who ended here, a lot of people expected the price could go and take this liquidity because it spent a lot of time here, right? So if you call it as an imbalance, I would say there was a fair value gap here. So the price was touching like every four candles you see here, it was respecting, but I won't consider Saturday as the as a liquidity uh, day. But when you see Sunday normally it used to blast and get that liquidity, but nobody expected that a move, something similar to that from here. So there was a lot of liquidity was resting here. So if you consider from here to here, there were 2 days and 16 hours of liquidity was resting there. So market makers got like a bunch of liquidities, and a lot of people might have sets or stop losses here, 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 right? Then most probably or maximum by here. And trust me, if you are looking for a long entry, you would never take a trade something like this in a 4 hours, right? And this is 1.28x. You would never take that trade. So most of the time people would take trade somewhere around like these, or maybe 2x, 3x. It's like a minimum one. So as you can see here, they expected the price would come back and see grab. They took this liquidity, and people thought like, okay, I ended here. This is an easy 3.7x. What if I widening the stop loss is maybe around, yeah, since they feel like, okay, fair value gap is respecting, so it should respect. Then you see it's 7x. So people who are greedy, who tried it, and if you try to uh, do a trade or take a trade without a stop loss, then what happens here is, okay, I'll just give you as an example. And if you're a swing trader, you're trying to get this trade on a 7x risk reward, right? Then what happens here is, if you're on BiasLogic, then what you're going to do is you'll come here and you paste it here, the entry, um, the target, then sorry, the stop loss. So if you enter this, so this is based on my capital, which is available for uh, the the live trading. So if I have like $1,100 capital, based on my risk profile, I set it in bias logic. I shouldn't be taking more than 2% of my capital. So based on what I see here is, if I feel like, let's say, this trade, like expected from here, this is Sunday, and on Sunday morning, yeah, 12 a.m., then on evening, I expected the price would go and touch this, like, liquidity. Um, I could have made by risking, see, technically, you shouldn't be risking more than 3% of your capital, right? Let's say if you're fine with risking 3%, you could have just made $245, and your trading fees would be $11. So that's like your day. If you hold that trade, that would be like 245 gross profit, and there's a fees involved in it. And after net profit, your after the fees and your net profit would be 234. So this kind of like a calculation is really good before you make a decision, because you just want to make sure that the exchange is not eating most of your profit, right? But the reason why I'm giving you this, showing you this example is that, okay, so based on my capital recommended risk, it's 2. That's why it's just giving me a warning. Make sure that you protect your capital, because the best example is here. So if I was able to take this trade from here by doing this kind of like an trade setup, assuming that the market is going to go and take it, it's supposed to go and take it, right? But there's a reason behind it, why it dropped it. But before I just explain that one, but I just want to show you the importance of the risk management. If you are a person who feel like, okay, I don't want to set like a stop loss here, right? I will enter it here, then I'll hold the trade. Like it happened. You see that you try to take this trade from here and it touched it, which is fine, right? And you were able to bag 4.7. If you're fine, if you're a person who is looking for a 4.7 x risk reward, it's totally fine. You can just exit the trade. But how do you know that uh, it's gonna hit here, right? Because there are liquidities was resting here, and there is an important liquidity is resting here, because there are kind of like an equal highs, right? So the market would consider that as a magnet, and it'll go and attract and get it. But things have changed. Like the market makers are not sitting in front of the computer and just like giving you the easy money. No, they won't they won't they won't make you to become like rich, because they need your money to run the market. Because um once you exit the market by wasting your capital, then uh, technically there are nobody's there in the market to give them the money to push the market. So even if there are no retail traders, they'll still run the market. But that time, that's going to be a different scenario. But since retail traders find like an easy way of making money, they feel like this is an easy way of making money, because you just enter the trade here, you just risk 30 $30 and you're going to make 245. There's nothing wrong, retail traders think in this way, but you should think in a different way, that what if um, the trade didn't go well based on my assumption, then how much money I should lose, right? So that's important. So if you're a swing trader, then you are looking for you're not sitting in front of the computer. You just find a sport, then you're just entering it, and you're just expecting the price is going to go up for that day, or for the next day you'll hold and you'll just get out of the trade and make that money. And I'm sure that you won't be risking 33, you should be risking somewhere around 100. But the important part here is, once it all depends upon your capital, right? If you have 1,000, like $1,100 in this case, but if you have $1,000 capital, then you shouldn't be risking more than 3% of the trade, is because in case if your analysis was wrong, like the same thing happened here, then you're going to lose only 45. That means only 3% of the capital is gone. That means you still have 97% of your capital there for the next day. Like if you are just trying to take this trade, right? Then you need money. So if you just exhausted that $100, and that's somewhere around 9% of your capital, that's technically the next 4 days of trade, or a day if you're taking 3 trades. So in a swing trader case, it's going to be the next 4 or 5 days of trade. You're just wasting in just one single day, right? So that's not the right strategy here. So as I just gave you, and the reason why I'm just telling this example, because it's exactly it's happened here. Everybody expected the price would go up and take that liquidity, then reverse or go up, but market makers knows where the retail traders' mindsets are, how they are trying to take a trade, then then they'll do a kind of a waterfall so that there's no way that you can just exit a trade, like close the trade, other than do a kind of like a strategy to plan and reverse and get your money back. A common retail traders, what they do is, they'll expand it when they see this candle is coming. Okay, 4, 3, 2.5, 1 point. And then okay, I'll just close it in break even at least. That's the next thing. Then they'll draw it from here till here. You know what happens? So they'll they'll draw till here. Then they'll see like, okay, see now what happens that it didn't close my trade, and next green candle formed, and that's a 4 hours candle. Then they expect like, oh, okay. And now this is another manipulation from the big players. So when you believe a high time frame order block, so this was like a high time frame order block, right? So technically what happens that when you see it, it respected a kind of that order block, right? Then if you consider like a full wick candle, and it just tapped it, and the next candle opened by um, the buyers. You know what as a retail traders do? Then they'll keep this like stop loss here by assuming that, right, the price would go up. Then this is exactly what the the big players need, right? Because as a person, or like a retail traders who enter the position here, dragged it means that's not a right strategy of doing it, but people do it, right? Just to protect it by saying that, hey, I expected 6 4, then I just need one. Now you know what happens. That's the one type of trader. The other type of traders is like they'll feel like this movement is because of the price, like it reversed. So as an example, like it if you consider this is like a long wick and there is a lot of liquidities resting here, then the people who think like this is a kind of like a best place to enter, and it respected, right? And a group of traders might have ended it here, maybe if you might have waited after confirmation or something, then you ended it here by assuming that the price would go and grab it here. Now see what happens here is the second group of traders might have entered a trade from here by just putting a stop loss somewhere here, by maybe easily targeting somewhere here at least, or here to 7. Now you see what happens. They left from the computer. Then the next thing happened was they did a big wick, like multiple bearish candles, and they are also out of the game. And this person, this person is also out of the game because he won't be dragging other than risk, like the break even. So what he's going to do is that he's going to cancel or close his trade, so that rather than just doing loss, then he'll exit in break even. But the problem here is, um, who got trapped here in these manipulation? Of course, the retail traders. Now, what I'm trying to say is that when you understand that the overall trend is reversed from here, then you shouldn't be taking a trade, like a buy trade from here, unless until you got a confirmation. So because based on, as I said, like multiple bearish candles are forming, so it's not a good sign that the market is trying to go up and take that liquidity. There is a less chance that the market would go and take that liquidity, right? So that's where the risk management plays a role. Like you have to risk maximum of 3%, so that and that particular trade you lost only 33. And even if you take that trade, if you enter that position here, so the market, then this system is going to tell you like, um, your risk capital of course is 3% and your fees is 11.64, and combining that is technically a net risk of 4.06%, even though it says 7.4 for risk reward, but in a net risk reward after the fees deduction is going to be like 5.24. So in my case, I would suggest, if I'm in a position, like I would say this is still a fine, like a reasonable risk reward. And based on your capital, the system is going to tell you how much leverage you just need, and so that you don't want to widening your stop loss. This is the exact um, leverage you can take it from the exchange, and this is your liquidation level that's far from your stop loss, and this is the quantity that you should put into your exchange. So everything is in front of your system, and if you consider this as like, if you punched into the trade exchange, and if you want to log it, it's as simple as that. You just, since you selected 3% risk, then you just hit it, and it's actually logged here as a draft mode. So you just wanted to provide only few information here, um like like these information, which is which session that you take this trade, so that the system will have a better clarity on if it's a win or lose, which uh, session that brings you the more money and less money, so that you can make a call there, and you can even provide any setup name that you do, so that it's for your own good. And once you enter the trade, then the system will help you to log it. So it's just like a one-click system. So you don't want it to wait for a trade to finish. Then it's just like a one-click trade. And after you log the trade, um, yeah. So just put NA. Oops, NA. So once you log this trade, then it's gonna ask you the time. Yes, you can see here it shows 14, but here in my country it's 13. So I just want to make sure that I'll just change that into today's date. Then I'll just log my trade. That's it. So it's pretty simple and straightforward in terms of how do we uh, log this into the journal. So you don't need a separate sheet, or you don't want to manually enter every time. The system will automatically remember and push that into the the ledger. And once you enter it, then you'll see the whole performance, how your whole month is doing, then what setup, which session, and which direction, and which pair that helped you to get that money. Yeah. So coming back to the point here. So as I mentioned here, um, now the market took the liquidity, and the buyers tried to push the price up, but still, based on what I see here, is the sellers are in control. They are just trying to push the price down based on what I see in 4 hours. But in 1 hour, it looks like um, it giving enough support to push the market till at least here. So that's the prediction here. So one of the best way that you can make money is because of how you are framing and lowering your time frame. So based on your analysis, you're going to lower the time frame and find a perfect entry to take this trade here. So that's a kind of like a strategy that I use. But there are a lot of parameters that you should consider when you lowering it the time frame and get it, because sometimes your strategy won't work. But I consider this as my next point of liquidity. So I'll try to take a trade, then set my, like, a target here. So now I'll show you the beauty of um, um, like a lower time frame entry. Now, if you're trying to take a trade here, right, like this, what happens that where you're going to put your stop loss here, maybe the next low, then if you try to take it here, then that's 2.4x. But and at the same time, if you're going to the lower time frame, then you would get more refined. And if you just go for a so if you feel like the market wants to go from here, that means it's got enough support here, then you try to put the low here. Now see it even jumped from 3 to 6.12, but it's not the right strategy because 1 minute time frame you will have a lot of noises, and it can even take all these liquidity in one single shot, then get you out from the trade, then it moves its own direction. So that's why I always suggest to do a proper analysis and find out where is the liquidity is resting, then plan the trade, then just like bag your profit. Now for the people who like who are greedy and who are panicking, what they'll do is like they don't have a patience. They'll feel like, okay, hey, it's respecting here, so let me just go and enter from here and get that trade. So there are only two ways. Either you should wait for this perfect entry, then this like ranging, then you see this, it respected, it took this liquidity and it's just going up. So you should plan a trade from here, right? Not from here. So if as a really good trader, if you miss it, forget about it, because you don't want to chase the market, because as I mentioned, the next liquidity is here, right? And after that, the next liquidity is here, but we don't know when it is gonna when it's gonna happen. But based on what I see, the market should go and grab it. Then from here, there should be a reversal. So you can even plan something from here like this, right? Then it'll go like that. But there's also a chance that the market can come here and grab it, then go and take it. So people who try to enter it here, see, there are a lot of people might have entered it here, and I'm 100% sure, like something like this, set a stop loss here, then plan the trade by maybe 10, not 10, but maybe they just analyzed here and just put a stop loss here like 5.8x. But market makers know that, like, they know where are these pending orders are resting. So they can easily find out how many orders are pending in this range. So as I mentioned even earlier also, there are uh, situations where you cannot predict the market. And I'm just giving as an example, right now the time is what, like 9:30 p.m., but in Eastern time it's 11:30 p.m., right? So for 11:30 p.m., assume that there if the big players set okay, I'm just giving as an example, like when they identify there are multiple lows here, you know, they'll put like 1 million order here, because based on what I see here, there are a lot of buyers here who are already currently in the trade by expecting the price would go up. Then that's around 8 hours and 15 minutes. And 8 hours and 15 minutes, it's pretty decent liquidity that they can hunt. So I'm just giving as an example of what if they set like a 1 million buy order here, and from here they did 1 million sell order. I'll just put as SO, right? And this is 1 million BO buy order. Now what happens here is when we have the reason why I say that, of course, you can trust the back testing, but if you're relying only on back testing, um, once this happens and you go to the chart and you just do the reply or replay, sorry, you do the replay, then you will find that okay, from here it moved and took the liquidity, then it's going up. That's not the truth, and that's not happen every time. Like that's might be a one time process, because the key players identify that there is a bunch of liquidities resting here, and it's not going to happen every time, right? But the gurus and the online, like people, what they do is that they do a back testing and they do create strategies, and they say that hey, once it came here, then that considered as a support zone, then they come here and take it, then they'll move it. But no, that's a very rare case scenario, that would happen every time. And sometimes the market makers make it as a pattern, then they change it. Like every two times they'll do that, then you consider that as a strategy, then the third time they'll change it, then you'll identify that as a strategy, then you'll consider the third thing as the strategy, then they do it on the second time, then they do on the first time, maybe they do up to fourth time. So it's a little bit tricky when they'll punch the order. And if I have like $10 billion, I can just punch this and manipulate this market, because the algorithm works. How the algorithm works is when the algorithm find this 1 million order here, slowly it will come and take it. But if if I do a nice push from here, like I just put multiple 100,000, $200,000 here, then there is market doesn't even have, the algorithm doesn't have a choice other than go and grab that, right? So it will collect that, then it will go up, then there will be a little maybe $50,000 sitting here, but they'll set a 200,000 here, then the market would take that. Then the next thing is market will look for what is that pending big order. So that's, of course, that's the 1 million buy order. So the retail traders doesn't even know, like that there is a order is pending here. Now, based on retail traders, what they'll see, like okay, hey, 15 minutes it's dropping, and there are strategies in the market where we call it as break of structure and change of character. And when they see that, they'll purposefully they do this and they'll close it, then everybody will think that hey, the trend is keep continuing. And you know what happens, as I mentioned here, they'll set that buy order somewhere here, right? Then what happens, everybody will be setting, like yeah, from here people might have set um the sell orders by without taking the profit here, by they see like hey, since this market is closed here, so that means it'll look for the next liquidity somewhere here. Then you know what happens, then there'll be a fast move like the one that I mentioned, like the market want to go here or take this liquidity. You know what happens, the market will fire like this. You will not have any other choice other than, and it'll be like so fast. It's not that like okay, it's just like going like this. No, it will be like super fast, so that they know like the big players knows that there are a lot of pending orders here. So once you push it, it's worth of investing it. See, they bought the price, they sold the price in 62,000, and how much is around one Bitcoin, it's around 200, but they won't do that as a $200. I'm just giving as an example. If it's like $1,000 difference, like one Bitcoin $1,000, then they punch billions of dollars of order, and assume that from 61,892 to 64, that's $2,000 per Bitcoin, right? And millions of billions of dollars per Bitcoin. So maybe they'll buy, who knows, maybe more than 10,000 or 5,000. So then you see from here to here, like if I guess from here to here, if they just do that analysis or they just push it, that's like 2 hours and 45 minutes, right? So that's how the market makers manipulate the market. So our job is to make sure that we be patient and enough, and don't just like do an analysis and jump, then immediately log the trade and assume that the market wants to go and grab this. No. So the market, if the market wants to go there, the market will go there. So how fast the market will go here, it all depends on the presence of the smart money. So if the smart money's presence is there, then it's an easy task. You see right now, and I was about to punch this trade. I think I take the trade here. I log the trade here. Okay, this was my trade. Let me just cross check here. Where did I log the trade? Yeah, so here was my trade. No, I think I was here. Yeah, this was my trade. Okay. Uh, the reason why I entered the trade, because I knew it. Um, it's enough for the market, and the psychology is almost done. As I mentioned earlier, here there was order block here, and everybody thought like the market wants to go up. Then they took that liquidity, and people might have thought like, hey, there was a fair value gap here. That also people entered it on here. If I see here, look at this. So there was a fair value gap. So people, and this first of all, this group, maybe like an order block. There is one group ended here, gone. The second group ended here, they're also gone. Now the third group, I don't think so that they'll do that much of patience to do it. So I identified, and I thought like, okay, this is the right time to take that trade. But I think that was, yeah, I was not live at that time, but I took this trade here. Now my trade is currently on live. So as you can see here, right now it's at 8.1. I didn't close the trade. And right now, if I just expect the price would go up here and take it, and that's a 14x. So you see the difference here. If you enter it here, even you widening stop loss, even if you try to do this kind of like a setup, it's somewhere around 9, but you don't have a guarantee or like a probability that they do that manipulation. And they do, yeah, if they want to really want to do that manipulation here, you know, if I identify that the market is kind of doing a big wick, I set alerts here, right? So I can easily get that 4.58x and peace of mind. So that's why entering, the people who entered it here, the people who entered in here and waiting for this much of hours, like 5 hours, then losing that entire money, and people who are entering it here by doing a proper analysis, then being on that trade and finding that right uh, target would actually get you more risk reward. But as I mentioned, you don't want to target this much of trade, but based on my analysis, the market wants to go there and grab that um, liquidity. Then based on what I see as a day trend, it's trying to take uh, some liquidities down before they do that big move. That's that's what I'm thinking from a manipulation perspective of a big player or a smart money. So now this is wasting a lot of time here and inviting sellers, because a person who to looking at to take a short trade, they feel like, hey, if they do the Fibonacci retracement kind of stuff, then if you see it, let's say I just do a gang box. So if you see it here, yeah, so it's almost like 50% and 0.612% is somewhere it's touched it. So for the person who's looking for a short entry, it's the right setup for them, because uh, it took here in the same way. Like you can see the pullback, and they also thought that this is a pullback and the market is going to come down. So they punch a lot of sell orders here. So now that's one of the reason why it's keep getting rejected here, because there's a lot of sell orders here, and that's what the manipulator and the market want, because this all will be taken in just one single week, and carefully after collecting these liquidities here. So that's why they take first this, then they take that, or maybe they take that first, then take this, then they'll go up. So yeah, that's all about today's live session. I'm sure that you might have learned something new today in terms of how we analyze the market and something in terms of the psychology and the risk management behind every trade that we take. Yeah, as I mentioned earlier, if you are interested in the BiasLogic system, you are happy to uh, subscribe to the free weekly bias and community access. I spend most of the time uh, on these communities to answer your questions, and if you really have a doubt of something, just please come and join the live. Every day we do the live, and you can ask a question, and I'd be happy to give you an answer if you have any questions. So we can just close this trade. Sorry, we can just close this live today and see you tomorrow. Um, if you missed the live, it's totally fine. And I'm just looking for some serious users who really want to learn something rather than just looking for some signals and trade setups. Um, because the trade signals, I'm not a big fan of trade signals, and I'm not a big fan of multiple trade signals. And I have no idea how people are able to generate 10, 15 trades in a day where there are only um, a few moments where the big players currently in the market to take someone else liquidity, or if they're giving you a lot of uh, signals, then you are going to be the part of that liquidity. So don't be like a part of liquidity or part of these manipulators try to steal the money in the market. Try to be smart and always think like a prop trader or like a big players in the market. And trading is not that easy. You need a lot of mental health and decision making skills to overcome um, these, like, smart people currently active in the market. But yeah, that's one of the reason why I just built this system, as I mentioned, like structured execution platform for crypto traders, combining risk management, journaling, performance analytics, and institutional market bias into one dashboard. So I'm sure that this system would somehow help you to change your way of trading. And if you are a serious user who are interested in learning things, you can go ahead and watch some videos. And if you're really good at reading, I've started writing some blogs here under resources, so you can read it, like if you're like a really uh if you like reading, of course. And I give some detailed explanation on how the smart money is moving the prices, and it has got everything. And if you're not a person who watch a lot of videos, then you can just go through it and learn it. And if you still have questions, and if you feel like um, need more information, so you can just join the community, then post a question, then I'll get a topic to discuss on the next day, right, in the live. So that's all about for the day, and thank you so much for watching this video. See you on next video.